I'm Erin Bohr, USMEF economist. And again, I must say, I miss being with you in your dynamic and amazingly resilient market. And thank you for your continued support of US red meat. And we were thrilled to celebrate the 30 years of USMEF in Korea in 2021. I am blessed to work from the ranch in Northern California. And you can see our Angus cattle are out on winter range now. And these are pictures I took over the last week. And calving season has also just begun here. Okay, so today I will start with the macro outlook, and then we'll dive into food sector trends, and then into the global beef situation, and we will finish with the global pork situation. As we look ahead in 2022, inflation takes center stage as supply chain issues persist against massive demand. Omicron takes its toll now. China slows, but there is still much optimism for this year. And the real watch out seems to be closer to 2023, while we still ride the slow descent in 2022, and that's from the peak comeback in 2021. For US red meat specifically, we still see the US essentially maintaining our record export pace through many continuing headwinds and the risk of continued volatility. The health situation continues to impact both livestock and people. For livestock, ASF remains the biggest in terms of supply and trade disruption. There are continued new implications in Europe with the findings in Italy and in Asia with the announcements in Thailand. But the strong production recovery in China has meant that ASF impacts are now more intensive on trade flows rather than on the global supply situation. The Americas and US specifically are in prevention mode, keeping ASF out of the US in its territories after those findings in the Dominican Republic and Haiti last year. For human health, the Omicron variant seems to spread incredibly fast and then drop just as quickly. At least that is what the data from South Africa, the United Kingdom, and Canada, for example, show. And it looks like a similar situation is close to playing out here in the US. Korea continues to have significantly lower cases and a continued stronger effort, relatively speaking, to contain and minimize cases. And we note that cases in both Japan and Korea are on the uptrend again, and you can see this drop in Canada and potentially getting close to seeing a significant drop here in the US. So as we look ahead this year, there are many common themes with 2021, and this includes still limited global supplies of beef, although for pork it is a more mixed situation. Strong consumer demand for high quality red meat in the US and in our top export markets, including Korea. But we also expect for inflation to start to dampen consumer spending, perhaps later in the year. The biggest limiting factor is still the supply chain bottleneck, and particularly for exports, these issues even impacting chilled shipments. Prices are expected to remain high with limited US production this year, combined with the strong demand for low inventories in cold storage. And trade remains critical, not only to the US industry profitability, but to meeting our global consumer demand for red meat. In other words, the US still has the natural resources and related comparative advantages for red meat production. There are several forecasts coming out now with modest reductions to the 2022 GDP outlook. But expectations are for Omicron to slow growth right now here in Q1, and then for a resumption of growth in the following quarters. So from the IMF this week, global growth slows from 5.9% in 2021 to 4.4% in 2022. The World Bank came out with similar estimates earlier this month, and Oxford Economics has a similar outlook as shown. Oxford and others have also been highlighting the slowdown in China, and that is the big change as we look ahead, or as we look at the past 10 or so years. And so you can see China slowing down here while Korea, US, and other countries, including especially Japan, are relatively stronger than we've seen over the past 10 years. And Oxford Economics' latest estimates for this range of scenarios shown on this slide shows the possible downside risk to the outlook due to continued supply chain constraints and similar potential reductions due to long COVID, although the supply chain risks have a higher likelihood or a higher weighting in their scenarios. And then for inflation, the risk of inflation persisting, you know, has a more significant downside risk if we look out to 2023. So again, the baseline is for continued relatively strong GDP growth here in the US, but there are some downside risks for these alternative scenarios. And for Korea, the outlook also remains very optimistic, with IMF expecting 3.3% GDP growth this year following the strong 4.3% last year, which was the highest in 11 years. They also have inflation moderating and note the relatively high excess savings rate as estimated by Oxford Economics. And this high excess savings is partially expected to underpin the strong outlook for Korea this year. For the US, as you saw in the previous or earlier slide, the excess savings rate has been dropping and normalizing as income has been shifting from the government transfers or stimulus that we saw earlier on in the pandemic and more toward wages and labor-related compensation. The first two rounds of stimulus payments lifted 11.7 million people out of poverty, according to the Census Bureau. With the stimulus, Americans built up 2.7 trillion in excess savings. Some expect that, combined with rising wages, to provide them with lasting stability despite the return to more normal spending patterns and rising inflation. But again, the signs are that things are starting to normalize with this reduction in the savings rate. US consumer spending shifted to goods instead of services, driving the surge in imports and contributing to the shipping backlogs. But spending, again, has been normalizing, as have disposable incomes. As Americans shift back to spending more on travel and other experiences, including eating out, going to sporting events and concerts and such, there is an expectation that they will spend less on stuff like furniture and electronics. You'll also note this chart shows the spending on goods never really recovered after the great financial crisis. So there appeared to be some real pent-up demand for spending on things like home improvement, especially as consumers spent more time in their homes or bought new ones. With inflation also expected to limit spending growth, perhaps we will see some slowdown in imports and an improving export shipping situation eventually, perhaps later this year. But also recognizing that China's zero COVID strategy is at least potentially impacting the supply chain now or possibly after Chinese New Year. When we look specifically at prime age workers, those in the 25 to 54 years old range, they have been returning to the workforce, and the employment to population ratio has recovered to 79% as of December, down from 80.5% in early 2020, but it's expected to return to that level or essentially full employment by the end of this year. Meanwhile, job openings remain near historic highs in late 2021. We hear about the shortages of truck drivers, for example, and warehousing workers as part of the reason for the supply chain backlogs. There are also significant shortages of workers in the restaurant industry. I know it is the same in Korea. And the challenges for restaurants with rising costs of food and labor and uncertain pandemic situation and rules, and at the same time, a decrease in the eating experience when service quality deteriorates due to the lack of workers. So all challenges facing the food service industry here in the States. And for our US packing plants, they have also been managing through labor shortages and the Omicron wave currently. And this has meant that they have mostly just been unable to provide the volume of deboned, trimmed, and other specifications. So still having throughput through the plants, but unable to meet the value added aspects due to limited workers. The 2022 Meat and Poultry Processor Confidence Survey showed lack of skilled workforce as the top concern, followed by labor costs, energy and raw material costs, and transportation and shipping issues. And so we see clearly in this survey that that is the top of mind challenge for our meat industry. And again, with the tight labor market is only expected to continue. The strong demand for red meat has been impressive throughout the pandemic. Even with a significant disruption and change in channels away from food service and to retail, e-commerce, and delivery, total demand for US red meat increased dramatically. For 2022, a continued recovery of food service is expected and continued growth for e-commerce and delivery. Food service is not expected to recover 2019 levels until 2023. The long-term trends continue to favor e-commerce, delivery, and ready meals when we look at the global data. We know Korea is a leader in these areas of convenience and is the third largest market for food and drink e-commerce, with continued growth expected and sales to reach at least $37 billion by 2025. Korea is the largest food and drink e-commerce market on a per capita basis, with spending of $390 in 2020 and forecast to reach more than $700 by 2025. We also know the lines are blurring across the categories of e-commerce. Even with the continued focus on e-commerce and growth in ready meals as well, Korea is expected to see a strong increase in food service. Looking out to 2025, Korea trails only China and the US for expected growth in food service sales. Looking across the segments within the Korean market shows the steady growth in e-commerce, including for food and drink specifically, but also the strong rebound and then growth in food service. Food service is expected to recover to 2019 levels this year, and year-over-year growth is expected at about 7%, and then to see annual growth of about 4%. The growth rates for e-commerce are expected to be closer to 10%. You already know firsthand that on-demand delivery is changing the entire food and drink industry, and the trends for these many facets of convenience are going to continue to shape the Korean market, from HMR and RMR examples to the rapid delivery of everything. We also see the continued focus on health and know that high-value protein is an important part of a nutrient-dense diet. There have also been studies on its importance for factors like mood. And here is just one example on the importance of red meat for adequate iron intake. It takes much less cooked beef liver or cooked beef muscle cuts to get absorbable heme iron than is possible through much larger volumes of spinach, peas, or beans. There is also a continued focus, mainly in the media, on the plant-based or alternative proteins. And in surveyed consumers, data here from Euromonitor, there is still a share who are incorporating additional plant-based products. In this particular survey, health was the most cited reason, but also environmental concerns. The data continues to show the importance of red meat, on the other hand, including excerpts from another article here from the UK in this case, for human health. And livestock also remain critical to planet health as well, including for grazing rangelands, which otherwise cannot be utilized to produce food, and also contributing to biodiversity, just as a couple of examples. So we continue to educate on the real health and planet attributes of US livestock production and red meat. Let's shift now to the global meat outlook. These forecasts include USDA's latest estimates published earlier this month. They show global pork production remaining below 2018 levels by about 2% this year, compared to 3% last year and 14% in 2020. Thus, the global supply is rebounding, thanks mainly to a rebound in China. But production is still below pre-ASF levels. For beef, production remains incredibly tight, essentially flat in 2020 through 2022, and at 2 to 3% less than in 2019, which was the peak. Herd rebuilding continues in Australia, and drought has been impacting the Americas, including a sharp reduction in beef production in South America last year, and some slowdown expected in the US this year. Global hog and cattle prices also indicate the shifting supply and demand situations between the US and our biggest competitors. Note that US hog prices have been above EU prices since early 2021, and in contrast to the normal situation where US prices are more competitive, due partly to our lower cost of production. EU prices were hit hard with the ASF findings in Germany in September 2020, and then again with the drop in Chinese imports in mid-2021. US prices, on the other hand, remained elevated due to strong demand, including both domestic and export markets other than China, and due to limited inventories in cold storage and a slowdown in production in the second half of last year. For cattle, it's the opposite. Australia's prices have been above US since early 2020 as herd rebuilding got underway strongly in Australia, with the improvement in pasture and grazing conditions and following massive herd liquidation in the prior years. US cattle prices have been negatively impacted by the supply chain challenges, but started to rebound strongly in November and are expected to remain higher in 2022, due partly to a smaller calf crop over the past 2 years. And eventually, there will be smaller placements of cattle on feed and smaller slaughter numbers. But as you can see here, and Jessica will talk more about this, the reduction in US beef output is expected to be relatively modest, and the increase in Australia is also expected to be quite minimal. US beef exports are record large and account for just 13% of production. Australia's production is just 15% of US production volume, and Australia's exports account for more than 69% of their production. Australia's production and exports in 2022 are to remain below 2020 and prior year levels. US production is to ease back to 2019-2020 levels, while exports hold at the record pace that we saw last year. Another sign of the strong global demand is the higher beef carcass prices around the world in 2021. Note the sharp increase in Korea, the rebound in Japan, continued increases in China, and higher prices across the major exporting countries. Again, these high cattle prices came with the improvement in the supply chain, so at the packing plant level, compared to 2020, but they were also higher than previous years due to both limited global production and to strong global demand. Global trade also increased last year despite smaller beef production. This growth was led by the US. We trailed only Brazil on an export volume basis and remained number one on a value basis. Exports slowed year over year for Brazil, Australia, and Argentina, due mainly to limited production, but also some issues with access to China. And for Argentina, due to its government restricting exports. China's beef imports set a new annual record last year, totaling 2.365 million metric tons, up 10%, and maintaining their position as the dominant number one importer of beef globally. But import volume has slowed from the torrid pace of prior years, partly reflecting limited global availability and China's restrictions on market access. So BSE-related suspensions for Brazil and Canada, many Australian plants still suspended for various reasons. The US accounted for just over 6% of China's total beef imports. But we have become the largest supplier of grain-fed beef to China, with our grain-fed volume approaching nearly 3 times that of Australia. Also to note that Korea has resumed imports of Canadian beef after the atypical BSE finding, but China is maintaining its ban. China's strong demand for US beef has contributed to higher prices for US beef, especially the popular Asia cuts like short plate, short ribs, chuck short ribs, and various chuck items. This shows clearly in Korean import data, where the unit value for imports of US beef has surged, and in December was up 47% from year earlier for the average across the chilled cuts. Australia's prices were up 23%. Despite the logistical and other challenges, Korea imported record volumes of US beef, especially for chilled beef, up 23% to 77,000 metric tons last year, with US accounting for 65.6% of chilled import volume based on customs data. US beef now accounts for more than a third of Korean consumption, and per capita consumption continued to increase last year, increasing by an estimated 4%, and compared to 2012, consumption increased by 40%. So impressive. And for US beef last year, this included growth in imports of chuck roll, short plate, shoulder clod, loin, and shank categories, while the rib category slowed again. Strong retail demand continues to underpin the chilled growth, and food service can hopefully regain momentum this year as well. And it remains impressive to see the growth across the categories, and we know that's part of what's been underpinning this consumption growth is the wider availability of a variety of cuts. For US export data, we expect 2021 exports ended at about $10.5 billion, an increase of nearly $3 billion from the 2020 total and up 38%. Export volume increased by about 14% to 1.437 million metric tons. These totals include variety meats, which surpassed $1 billion for the first time. Korea likely tied with or narrowly eclipsed Japan as the top destination for US beef and variety meats, with value of about $2.37 billion. We are forecasting that Korea holds that top slot this year and helps to drive US beef exports to yet another record. Volume growth will be more limited this year, perhaps at the 1% to 2% growth, but value is still expected to increase strongly, potentially by about 10 to 12%, as global and US customers compete for US beef. Shifting over to the pork side, 2021 brought a big correction in hog prices. There were sharp reductions in prices in China and Vietnam, dropping from the 2020 highs, and steady to lower prices for those exporters most reliant on China, so EU, Brazil, and Chile. But prices trended higher in Korea, Taiwan, Colombia, Mexico, the US, and Canada. Part of this was a rebound from the challenging 2020, and part was pent-up demand and limited production growth. The US has benefited from a wide range of export markets, and in contrast with the situation for especially the EU, Brazil, and Chile, who are heavily reliant on the China market. China still accounted for 46% of EU exports, 53% of Brazil's, 64% of Chile's, and 23% of Canada's, while for the US, China only accounted for 18%. The diversity in US export markets, strong domestic demand, natural resource advantages, and competitive costs of production have contributed to growth in US pork production over the past several years and are expected to continue to drive future production growth. Although US pork production slowed last year from the 2020 peak, and production is expected to moderate again slightly this year, it is then expected to grow by at least 1% annually over the outlook, including a sharp rebound in 2023. Producers have faced productivity issues and have been cautious due to China, ASF, COVID-19, persistent labor shortages, Prop 12 uncertainty, and reduced line speeds in plants. These factors have contributed to contraction in output, even as producers were on balance profitable in 2021, and continued profits are expected for 2022. Still, the US situation is in sharp contrast to the EU. EU pork production is projected to fall by 9%, or a reduction of about 1.8 million metric tons between 2021 and 2031. The annual decrease over the next 10 years is 0.8%. The outlook for smaller production contrasts with annual growth of about 0.6% over the past 10 years, and is to follow record production of 23.66 million metric tons in 2021, and 22, or the current year production, is estimated to ease by about 0.5%. So unlike the profitable situation for US producers, EU producers are in a crisis situation, and more are expected to exit the industry. Besides the challenges of ASF and the lack of China demand, they're facing high input costs and the threat of further cost pressures from the EU Green Deal and the farm to fork strategy. The ASF situation in the EU had intensified last year with dramatically more wild boar cases in Germany, Slovakia, and Romania, and more domestic cases in Romania and Poland. Thus far in January, there have been further announcements with ASF jumping to Italy, and still unclear how it made this wide leap. And certainly due partly to the human element in that case. At any rate, Italy's top third country market is China, and Japan is number 3 after the US. Both China and Japan suspended imports. Thailand also announced ASF. Production is estimated to drop significantly, and there are related reports of ASF and government funding to deal with ASF dating back to 2019. Thailand's pork exports are mainly chilled pork to Hong Kong and cooked pork to Japan, both of which had already dropped sharply due to high prices and are now suspended. Thailand's imports are minimal and mainly from the EU. US exports to Thailand must be cooked and are also minimal. So there are limited opportunities for the US to ship more to Thailand at this point, even with their sharply higher prices. So the biggest impacts are likely to be localized to Thailand and its neighbors who have also relied on live hog imports, and in Hong Kong. But in that case, larger imports of fresh pork and hogs from China are already offsetting to some degree the need for chilled Thai pork. China's pork production outlook remains highly uncertain. China's NBS, or National Bureau of Statistics, shows the production in China surged to 52.96 million metric tons, up 29% from the 2020 volume, which NBS puts at 41 million metric tons, down only 3% from 2019, when production fell by 21%. USDA's Foreign Ag Service, their production, supply, and distribution data put 2020 production at 36.3 million metric tons, down 15% from 2019. And USDA's latest, or January, estimate for 2021 and 2022 production was increased significantly compared to the October forecast. So 2021 production was increased from 46 to 48.85 million metric tons, and 2022 increased from 43.75 to 49.5 million metric tons. USDA still puts China's production at less than China's NBS, but they are now forecasting an increase in China's production again in 2022, up 1% following 34% growth last year. The millions of tons differences in NBS and FAS projections from quarter to quarter show the vast uncertainty that persists in the China market, and the point that China has rebounded faster from ASF than expected, even if that volume varies by millions of tons. China's hog prices are highly correlated with their pork import volumes. This chart shows top exporter shipments to China in green and China's live hog price in blue. Current hog prices are low at around 14 yuan per kilo, or about $1 per pound. And the Dalian futures has prices only increasing to the 17 yuan per kilo range. in the second half of 2022, which is close to producer break even and is much lower than the 34 or so yuan per kilo, or more than US $2 per pound seen at the price and import peak time in 2020. So even forecasting a recovery in import volumes in the second half of this year, China's total import volumes for the year are expected to decrease again. Looking at exporter data, shipments to China, volume of pork cuts was estimated to have fallen by 28% last year and to decrease again by 14% this year. For combined pork and pork variety meats, the decrease was 23% last year and a further 9% reduction expected this year, as demand for variety meats has sustained at a higher level, even as muscle cut demand dropped sharply with the production rebound. And so we knew that EU pork would shift massively into the other markets once China's buying slowed. And that is exactly what happened. This helped contribute to a rebound in Korea's pork imports, with that big rebound and growth from Europe, and looking specifically at Spain, Netherlands, Austria, and so on. As EU prices plummeted from the July highs, falling by 27% by December, and at the same time, US prices have remained strong, as explained earlier. But the other good news part of this has been the growth in US chilled pork to Korea, up 132% to over 10,000 metric tons, and taking over the top supplier position with 40% import market share. The growth in imports of US pork has been in the belly category and in CT butts, both high value items, while picnics have been challenged by the relatively affordable prices for domestic hams. Despite the dramatic drop in US exports to China, growth in most other markets, and especially in Mexico and the Western Hemisphere, has contributed to another record year, with exports likely totaling around $8.14 billion, up 6%. And volume of about 2.9 million metric tons, close to the 2020 record. We are expecting exports to hold close to that level again this year, with a further reduction to China and further growth to other main markets, and this includes Korea. So with these concluding comments and thoughts on the screen, I want to thank you again for your continued partnership and support of the US beef and pork industries, and wish you a healthy and happy 2022. Hope to see you again soon. All the best.